All right, let's get right into it. If you're serious about not just surviving, but actually making it as a trader, there's one single rule that's more important than anything else. Seriously, it's not about finding the perfect stock pick, it's about staying in the game long enough to actually win. So, let's open up this professional's playbook and see how it's done.
So, let's start with the big question, right? Why do so many traders fail? I mean, it's a huge problem in the industry. And the answer? Well, it's probably not what you're thinking. It has very little to do with their charts or their strategies and, everything to do with their mindset.
And this really gets to the absolute heart of it. You've got the amateur on one side, basically chasing that one big jackpot, hoping to get rich quick. And then you have the professional on the other side, who is laser-focused on keeping their losses small and manageable. It's a total shift from playing offense to playing really, really smart defense.
And that brings us to what we'll call the trader's #1 rule, which is all about getting that pro mindset. It's a discipline, and it's called risk management. So what is risk management really? Well, it's actually pretty simple. It's the act of controlling, of deciding before you even enter a trade exactly how much you're willing to lose. It's all about being in the driver's seat before the market tries to take the wheel from you. I want you to notice the key word in that sentence, safely. Profitable traders aren't just thinking about losing. They're thinking about survival. They know that if they can just protect their account, protect their capital, then the chances to make a profit, well, they'll always be there.
Okay, so let's turn this idea into a real, concrete defensive playbook. These next two rules, they're your non-negotiables. They are the shield that will protect your trading capital.
Rule #1, and this is a big one, is the 2% rule. It just means you should never ever risk more than 1 to 2% of your entire account balance on any single trade. I'm telling you, this rule alone can save you from blowing up your account.
And here's what that actually looks like in real money. If you've got a $1,000 account, your max loss on a trade is $20. That's it. Got 10 grand, your max loss is 200. This isn't just a friendly suggestion, it's the mathematical firewall between you and financial disaster.
Now, let's talk about the second piece of our defensive playbook. This is something that, a lot of traders kind of treat as optional, but a professional knows the truth. A stop loss is not optional.
It is 100% mandatory. The market doesn't care about your hopes or what you think should happen. A stop loss is just a simple mechanical tool that saves you from a trade that goes horribly wrong, and maybe even more importantly, it saves you from your own emotions.
And let me be crystal clear about this. Trading without a stop loss isn't a strategy. It's just flat-out gambling. It's a huge, flashing red sign that you don't have the discipline you need to be a professional in this game. It really is that simple.
Okay, so we've got our defense locked down. Now let's shift gears and talk about how this solid defensive foundation actually lets you build a long-term, profitable strategy. This is where we go from just surviving in the market to actually thriving in it.
The engine that drives all long-term sustainable trading success is this one concept right here, a positive risk-to-reward ratio. This is the simple math that makes professional trading actually work over time.
And visually, it's this simple. You're always looking to risk a small amount, represented by this little red bar, for a potential gain that's way bigger, like this green bar. A great target for a pro is to risk, say, $1 to make $2 or even $3 back.
And here's where the magic really happens. When you get this right, something incredible becomes possible. Think about it. If your winning trades are 3 times bigger than your losing trades, you can actually be wrong more often than you're right and still make money. That is a total game changer for your trading psychology.
Which brings me to the final rule, and this one is all about what's going on upstairs in your head. So I want you to think for a second, what are the 2 biggest, most destructive enemies that every single trader has to face?
Yep, it's fear and greed. Fear is what makes you panic and close a good trade way too early. And greed is what makes you hold on to a losing trade forever, just hoping and praying it'll turn around. You put them together, and they are absolute account destroyers.
And this is why everything we've been talking about is so crucial. Proper risk management is the ultimate antidote to fear and greed. When you know for a fact that your maximum loss is small and totally under your control, you can think clearly, you can trade calmly, and just follow your plan. And that is the only way to succeed long-term.
So, let's bring it all home. Let's put everything together. This is your path to profit. It's not some big secret. It's just a playbook. A simple, disciplined playbook that separates the pros from the amateurs every single time. Here it is, your 4-step professional playbook. 1. Risk a maximum of 1 to 2% per trade. 2. You always use a stop loss, no exceptions. 3. You're always aiming for that positive risk-to-reward ratio. And 4. You use these first 3 rules to control your emotions and just execute your plan.
You know, when it comes down to it, it's all about this one powerful idea. Your number one job as a trader isn't to make money. It's to protect the money you already have. If you can do that, day in and day out, the profits, well, they'll take care of themselves.
So I'll just leave you with this one question to really think about. What game are you actually playing here? Are you chasing that lottery ticket, just hoping to get rich quick? Or are you building the discipline and the mindset you need to stay in the game for the long haul? The choice, as they say, is yours.